Interest rates are low, but at some point, they will rise. How will rising rates affect your investments? For stocks, one popular theory is that when rates rise, corporations will pay more to borrow, which cuts into profits, and so stocks should drop. It makes perfect sense, but the historic record shows that rising rates do not affect stock performance quite as neatly as those theories suggest. It's not that rates don't matter, it's just that there are also many other factors that affect the markets. Now, we've seen many studies recently looking at stock market performance when rates rose. For instance, the UBS study found that in 5 of the last 6 times short-term rates were raised, stocks kept going up, and for months at a time. BYU professor Craig Israelson looked at longer periods of time. He compared the 34-year period from 1948 to 1981 to the following 31 years through 2012. Rates generally rose in the first period and fell in the second. Well, the average annual return for stocks when rates rose was 11%. When they fell, it was an almost identical 1.14%. His study also shows the importance of diversification. If you owned nothing but bonds during that rising rate period, Israelson says you made 3.8% a year. During the falling rate period, you would have made 8.8% a year. That's a significant 5% difference. But if you were diversified, patient, and disciplined, that difference didn't matter much. According to the study, by simply adding some stocks and cash to the mix and rebalancing periodically, you would have made over 9.5% when rates rose and 9.9% when they fell. The difference dropped from 5% a year to less than 0.5% simply by diversifying. Now these are averages. In none of these time frames did things go smoothly in the markets, economically, or politically. Stocks can drop at any time. We diversify precisely because the world is full of uncertainties. Now as for bonds, well, rising rates can be tough on bonds. They have a direct negative effect, but that risk is definitely manageable. To learn more about how this can be done and get more details of the studies that I mentioned, see the blog section of our website and the post titled, "How Will Rising Rates Affect Your Investments?" Now, of course, if you have any questions about this issue or any of our other posts, feel free to give us a call. We would love to hear from you.